All right, hello and welcome everybody. Doug with the LincolnList.com. We're going to do another trade recap here on obviously a very nice trade, an ABCO, over $2,100 in gains. And just like so many of these recaps I've done recently, this is another trade that lasted all of 10 minutes. And I know this stuff sounds crazy to some people, but if you do your business right, and what I mean by that is if you study in the evenings, and in the pre-market, you're prepared with your personal pre-market checklist. You're looking for your bread and butter tier 1 setups. You should be able to make most of your money, especially as a day trader, within the first 30 minutes to 2 hours out of every day. So making 1,000 or 3,000 every day, it's not something that's out of the norm. In fact, I've told everybody, don't believe me. I'm not showing you these recaps just to show you stuff. Take a trial. Take a free trial to our live trade rooms. I'll show you this stuff live in real time. But as I said, if you do it right, you should be like the Mike Tyson of stock traders. You should walk into the ring, one punch, boom, knockout, pick up your check, go back to bed if you want to. So we're going to talk about how do we find these trades. I haven't really gone into a whole lot of depth when I've done these recaps, but I've kind of broken it down into a couple of the criteria that I look for and try to give you maybe a little bit better insight, especially if you're watching this for the first time. So what we're going to do is we'll talk about this ABCO. And the first thing I want to highlight out of this is the number 2, which is range. Now, range for me, which other traders may refer to it as something different, is how much does this stock move within a certain time frame during the day. And you're going to see a lot of times, especially on social media, traders just think naturally, which I understand, a stock should be shorted because it's up a lot. And I've made it clear that is not what I do. This kind of para strategy is more of something that's a euphoria trade. So if you're first time listening to it, para, you'll hear me use the words para, which is parabolic, supernova, vertical, whatever you want to call it. That is a term that's used for a stock that makes a tremendous move like this, which we'll go into that a little bit deeper. So when we look at this daily chart, which is what I have down here on the bottom, you look at these daily candlestick bars, and these are maybe $1. The biggest one might be $1.50, but mainly they're around $1 to 70 cents. So that tells me that the stock moves about $1, give or take, every day, up or down. That is the range. So when you look at this chart here, this is a 5-minute chart intraday. This little gray area for the Thinkorswim charts is pre-market. You see that it closes the previous business at $37. And then it, within the first couple of minutes of pre-market, this thing is up towards 45. So you have a $7 move, which is obviously 7 times its daily range. So you've got an enormous move. Now, this little icon down here is earnings, stock reports earnings, and big moves around earnings season like we're going through right now. You're going to see a lot of these, and sometimes earnings can be tough to short, but there is a limit to how much a stock goes up. One of the things I've always talked about in these is it's not how much a stock goes up, but how does it get to that point. It's more of a time versus price. Like I said, a euphoria trade, because there's a point here where fundamentals are out the window. People aren't trading on that. Technical analysis, they're not using that. They're just trading on straight emotion, right? So the pros and everyone else who's using technical analysis and is disciplined, or the fundamental analysis, they're already in the trade. The people that are chasing it up at these higher prices are amateurs, and that's why this stock is probably not going to hold that gain for a short period of time. So this is something I can't really show you without showing you in real time is speed. If you look right here, as soon as it opens, there's a wick or a tail on this. The stock immediately drops down to 41.20. Let me get a little trend line here. Drops down here to 41.20. And then immediately, like within just a couple of minutes, snaps all the way back up here to roughly 48. Okay. Now, one of the things that I was looking at this chart, when you look at the range, let's talk about the range. You're already up well over that amount, $8, $9. So you've definitely got range. You can X that one off the list. The stock is up a lot. One of the things I also like to use is the RSI right here. And you can put this in any chart that you have. It's not a golden indicator. Never think that anything is just going to say, hey, this indicator is gold. You short a stock when it has a 90 RSI, you're going to win. No, it's just a gauge. It just helps you with a little bit more data, a little bit more information, and adds a little bit more confidence to you, the trader, so you can execute. You can see down here, this reading is not, I mean, most of the times you're going to see stocks that break out get to a 90 RSI, maybe a 92. This had a 97, which not only do you have obsessive range, but you also have an obsessive RSI. So not only are these indicators high, they're like, let's say obnoxiously high, enormous speed, ridiculous range, and the RSI is about ready to blow through the screen. So you're reaching the extremes on all these levels. And I want to skip to 5 before I do the whole numbers. The next thing I'm looking at here is there was a couple of spots when this thing was up in the air. You look back in January, February, right here there was some peaks on this daily chart. Let's kind of open it up just a little bit so you guys can see it. There was some resistances right here at $47, and then these tall peaks right here, which were roughly about 49. What is this? Yeah, 49. So you had some good resistance, and as I've said before, the further you have to go back in time to get support and resistance, the more important these numbers are. So these turned out to be these were the two levels that I was looking at. So as we were going through this in the trade room, and it just kind of blew right through the 47 like it wasn't even there, before you could blink your eye. So as we were talking about in the trade room, I said, if this thing pushes itself above 48, I'm going to start into the trade with a starter position, because I always go into a starter position. For some of you struggling with trading, I don't have time to go into this now, but just a quick piece of advice, managing risk is a big deal. Position sizing is a big deal in business. You don't go full bore on anything, and stocks like this may squeeze a little bit. You have to prepare with proper position sizing. So I used a starter with the intent to work off of the 49 to maybe even 50 whole numbers. And I figured once we got up into the 49s, we would see some sort of resistance. Now, how much resistance or how much of a pullback, that remains to be seen. Every trade is different. But as I said before, you got to be in it to win it. You see it, you got to take it. Sometimes you'll take these trades, they'll be losers. Sometimes you'll take them, you'll make maybe a couple of bucks. But every 4 or 5 of these, you'll latch onto a mega winner. And that's what we're all trying to do in this business, is capture the big alpha, right? You're not going to make this kind of money trading, intraday scalps on Apple. What CNBC is telling you, these trades they don't talk about. But you got this superhuman range, and you got support and resistance. And fortunately for those supports and resistance, they're in the whole numbers. So my plan here was going in slightly above 48 when it popped up here, getting a fill, and then working it off of 49 to 50 with a possible add. Well, in this case, I'd say maybe 30% of these that I do, I'll have to add to the position. It'll require an add because I'm not perfect. The RSI is not perfect. Market's not perfect. Things don't follow perfect. That's why technical indicators are only gauges, not gospel. So 30% of these I will have to add to. In this case, I'll say in this case, I was fortunate enough not to have to. And immediately, as soon as it blew through 48, this thing just gets smoked. So my target on something like this is going back down to those whole numbers. So when I get in short 48, I'm looking, well, this thing could retrace to 47. Another key I like to use for some of those, want to know, is when you see a big bar like this and you get a reversal, I usually like to target a minimum of about 1/2 of that candle. So it's always something that's worked out as a pretty good target, just 1/2 of that. And then if you lose the 1/2, then you just work on the full candle. Sometimes traders will go, oh yeah, I'm up here and I'm looking for 38. Well, be realistic, one step at a time, right? So I look for 1/2 of that, and then then onto the bottom of the next candle. So it's sort of like just start retracing those candles. Now, one of the reasons I do that is I got a theory that I think, as I told before, amateurs buy these stocks. The real pros aren't chasing it up here at this price. That's why it's an emotional trade, because it's the amateurs that are buying. And these people that bought in these ranges are going to get what? They're going to get stopped out. They're going to stop out as soon as they see red. You're going to take these people out, and it's going to cause a snowball effect. The people at 46 are going to take profit, and one thing leads to another, and all these people sell. And that's what you had in this case. You know, it wipes out that candle, and it wiped it out pretty fast. And in this case, you got with such a big reversal. I call this the power of towers. I'm sure there's a technical analysis name for this. But when you get such a sharp reversal, that induces more emotion, which is panic. And we've always said that panic is worse than greed, right? That's why stocks drop normally faster than they go up, is because panic is a more powerful emotion than greed. So you got greed chasers, and then you got panic selling. And in this case, it happened so quickly, we were just trailing it down. You know, I would have gladly taken 47 if it was operating slowly. But really, I can't show you this in real time. If you have think or swim, play it back. This thing dropped, probably took this, the whole move lasted maybe 30 seconds, and it was wiped out. And then it completely follows it up before the panic is gone, the selling is over, and it nestles down into 42, which was, you know, this is close to a $5.50 move on just a few hundred shares. So all I had was I had a couple of hundred shares. It wasn't like I was 10,000 deep into this position, but you got a really nice move. To kind of recap this, spend a moment, write this down, but this is what I look for. It may sound like a lot, but when you do many thousands of trades like this, like I have, you know, you'll be able to look through all of these little criteria within a split second. So to me, it's speed, range, RSI, whole numbers, support, and resistance. And as you progress through your trading, you should be able to gather all those elements, make a quick decision, and that's what traders do. That's what the good ones do. That's what you're really doing when you're starting out. Is you're not trying to make money when you start out. I know this sounds like a buzzkill, but you're trying to build repetition. You know, because sometimes these stocks will appear seemingly out of nowhere on a PR report or on a news event or something like that, and you don't have time to fixate on it and say, well, why is this stock up? You can't sit here and say why. You have to go with your analysis. You know, respect your stops, control your risk management. You have to be able to do that if you want to be a pro. You got to be able to do that really in a snap of a finger. So for me, it's speed, range, RSI, whole numbers, and support and resistance. And in this case, which is not always the case for every play, all of those things lined up well, which increased the likelihood of something like this happening. And as I mentioned earlier, they were all at extreme readings. You know, sometimes these stocks will have minimal speed, but be high in range with a high RSI. And minimal speed's probably going to mean a minimal pullback, so it's not going to be so dramatic. Knowing that, going in, you can maybe lower your risk. You know, when you're going into trade, you have a certain expectation, right? So a trade that goes super vertical, supernova like this, you should get paid on it relatively quick if you do it right. If it goes up a little bit slower, it's going to come down slower. You have to be a little bit more patient with that play. Sometimes they don't always hit whole numbers. You know, they'll start slowing down before they get to whole numbers, and I'll enter just slightly before. Again, you can make modifications to that. It's not gospel. No, I don't sit here and I say, oh, when all 5 of these are met, I'll take a trade. No, it doesn't work like that. It's just guides and gauges. That's all technical analysis is. That's all your trading is guide and gauges. And then the rest of your money comes from what do you do after you're in the trade? What do you do? What do you do if it goes against you? Well, when do you take your money? Right? Sure, there's a lot of people that shorted this stock and took 35 cents, right, and cost themselves $5 worth of gains. We've all been guilty of doing stuff like that. So hopefully this kind of sheds a little bit of light on how we trade these. It's just a small part of what we do at the Lincoln List. It's a great trade, especially right now through earnings season. And with all these little parabolics and bullish markets, it's a really good time for parabolic shorting. It's not the only thing I do, but it is a big part of my business. And as I said before as well, it doesn't matter if you want to short stocks or not. Understanding this and knowing this keeps you from buying it, because I can tell you all of the people who were buying anywhere from 46 to 47 wish they would have saw this video, wish they would have said, maybe I shouldn't step into a 97 RSI. Yeah, maybe I should wait before I buy. And, you know, again, one of the things that we preach is, you know, what is the other side of the trade? I always want to know that. When I take a trade, I always want to know what the other side is doing. So hopefully this makes a little bit of sense. As I said before, I trade every day live on screen. I don't run a chat room. I run a trade room. These trades you see live. I walk all of the members through this, and you see it play out for the good ones, for the bad ones, for the ones that throw us on curves, for the shakeouts, the fake outs, or whatever it might be. And I think that's how you grow as a trader, especially if you're one of those that are struggling, and you're thinking, how do I cross? How do I cross from amateur, good days, bad days, good days, bad days? How do I become consistent, drama-free, precise, poised, and all of those qualities that pro traders have? And you need to be around the right kind of people. For some, it's going to take longer. For some, you need more help than others. That's what trade rooms are for. They're there to show you how to trade, teach you how to trade, share some of the strategies, and who knows, you may end up being better. Maybe you'll go off and you'll start your own room and pay back your strategies to others. But if you do want to learn, take a moment, visit thelincolnlist.com, have a free trial. Thanks for listening to me rant and rave. Another great trade. I'll keep you updated on these recaps. As always, take care of yourself. Have a great day. Talk to you soon.